This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC has raised its medium and long-term oil demand outlook in a forthcoming report, 3 OPEC sources said, despite the transition toward renewable energy, highlighting the oil exporting group's more bullish view compared to other forecasters. The OPEC is scheduled to update its long-term oil demand forecasts in its 2023 World Oil Outlook on October 9, which is being launched in Riyadh, the capital of top OPEC producer Saudi Arabia. Higher oil demand would be a boost for producers and the 13-nation OPEC and would underscore the need for continued investment. It also highlights OPEC's more bullish view on the oil demand outlook compared to the International Energy Agency, IEA, and other forecasters.
Russia's government said on Friday it had lifted a ban on pipeline diesel exports via ports, removing the bulk of restrictions installed on September 21. The restrictions for gasoline exports are still in place. Diesel is Russia's biggest oil product export, at about 35 million tons last year, of which almost three-quarters were shipped via pipelines. Russia also exported 4.8 million tons of gasoline in 2022. Global oil prices reversed early gains to decline after the news. As of 0730 GMT, Brent futures nudged down by 0.08% to $84.01 per barrel and were on track for their steepest weekly decline since March.
Moving on to the top news in the energy sector.
Oil prices rose on Friday but posted their steepest weekly losses since March, after another partial lifting of Russia's fuel export ban compounded demand fears due to macroeconomic headwinds. On Friday, Brent futures settled up 51 cents at $84.58 per barrel. U.S. West Texas Intermediate crude futures settled up 48 cents at $82.79. For the week, Brent posted a decline of about 11% and WTI recorded an over 8% drop, on worries that persistently high interest rates will slow global growth and hammer fuel demand. India's fuel consumption dropped 2% month-on-month in September. Data from the Petroleum Planning and Analysis Cell, PPAC, of the Oil Ministry showed on Friday. Total consumption in September, a proxy for oil demand, totaled 18.18 million metric tons, down from 18.57 million tons in August. However, it was up 7.6% compared with the same period a year earlier. Sales of gasoline in September were 1.1% lower than the previous month at 3.06 million tons. Sales of diesel, mainly used by trucks and commercially run passenger vehicles, decreased about 2.7% month-on-month to 6.49 million tons.
Next, we have the top news in metal markets.
Demand for copper and aluminium in China has been surprisingly robust despite the country's property sector crisis, driven by orders from the home appliance, electric vehicle, solar and wind sectors. That's lent support to otherwise weak copper prices globally and helped aluminium prices in the world's biggest metals consumer surge, according to traders, analysts and producers. For example, Chinese output of copper-intensive home appliances such as fridges and air conditioners grew by double digits in the first 8 months of the year. And, in September, factory activity expanded for the first time in 6 months.
Indian steel companies plan to raise prices of various grades of the alloy due to rising import costs of coking coal, especially from major producer Australia, officials at 4 domestic mills said. Steel mills are likely to raise rates by $25 to $50 a metric ton by December, said the officials, who did not wish to be named as they are not authorized to speak to media. Prices for Australian coking coal have jumped 50% to over $350 a metric ton due to factors such as maintenance outages, lower than usual supplies from Queensland, and a slower train network, Banmeet Kurmi, a metallurgical coal analyst at London-based Crew, a commodity-focused research group, said. We will now look at the top news in the agricultural sector. Russia will start delivering its grain to African countries within a month to 6 weeks. The Interfax news agency cited Agriculture Minister Dmitry Patrushev as saying on Friday. We are now finalizing all the documents. I think that within a month, or a month and a half, they will start, Interfax quoted Patrushev as saying. President Vladimir Putin told African leaders in July he would give them tens of thousands of tons of grain despite Western sanctions, which he said made it harder for Moscow to export its grain and fertilizers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.